Trying to time the market is a futile exercise. I've developed an EA which averages into the market. It has a few key settings you need to know before you run it. Since we're not trying to time the market, we're entering very small and averaging in, and we're waiting for the big market movers to move our positions into profit when they're ready. So yes, this is a slow burner. It will grow an account slowly over time if you use the right settings. This EA is not AI or clever at all. It's going to follow exactly the settings you put into it. In this video, I want to describe the theory behind my trading approach, as well as the mechanics behind when the bot's going to enter and leave positions. Let's get into it. Before I go any further, let's have a look at some results. So this is a 15-year test on 3 pairs using 10 spread. Over the years, it did around 86% yearly average returns with a max drawdown of 14%. Obviously, as the account grows over time, the take profits or your profits yearly will grow with it because we're targeting a percentage. More on that later. The equity chart is also nice smooth growth over time, all the way from 2010 to 2025. All right, let's go ahead and look at some of the settings. It's important to note that you do need 1 to 500 leverage. I'm not sure what the minimum is, but that's just what I use. Because we're adding multiple positions into the market, you can run out of margin if you do not have enough leverage. So what is my trading theory? My trading theory is that price will come back to some sort of mean or average over time. Now you can see this by zooming out and seeing if you draw a line across the middle, it's going to come back to its average over time. Even all these years back, it's not going too far up or too far down, and then eventually it's going to come back to its mean or average, which would be the middle of the chart, about here. So what we're doing is we're waiting for price to go stretched way too far in one direction for us to start entering against it. We're betting for these banks and financial institutions to be taking a profit soon. When they take profit, the market is going to move in the opposite direction. If they were buyers, now they flip to sellers. I want you to look closely at my crosshair. So we're going to mechanically see if price is stretched too far in one direction by using the RSI. That's showing how far stretched the market is in that particular direction. As a trader yourself, you'd be able to look at charts and be like, yep, that's stretched extremely far. It's going to have some sort of pullback. If you want to mechanically see this, you can have a look at the RSI. So my crosshair up here will also show down on the RSI. So we're stretched above our level actually here. What my trading theory is we're going to start averaging into this position. So we're stretched up, we'll enter our first short position. As you can see, we have another three and a half days of upwards movement against us still. But as it moves up, we're going to have a spacer, a minimum spacer between our trades, and a slight multiplier as well, making each position slightly larger. The slightly larger position is going to help bring our average price closer to where price is at the moment. And then every time we add our tiny positions, it's going to bring our average price up with us. So if we're in 4 positions and the market finally decides to have that pullback, our average price, or where our entry would actually be all the way up here. So even though you entered here first, well, you fucked up. You missed the timing of the market. However, by gradually adding these positions, you bring your average price up with you and end up being right and making a profit on all 4 trades overall. I cannot stress this enough. You have to enter with absolutely tiny positions, so if the market moves against you for days on end, you're not going to lose money or blow your account. So you can see we're stretched below, we move up, stretch below, move up, stretch above, move down, below, move up. So above, below. So that's just how it works. Now we're not just entering as soon as the RSI is extended. That would be madness. So our second entry criteria is a lower time frame moving average cross. This shows us that the buyers or the sellers are now stepping into the market. Let's look more in depth into the settings of how this bot actually works. I was not kidding about the tiny lot sizes. Most of the time I'm risking 0.25% of my account over one average daily range of movement. So if I get 4 days of movement against me, I'll be in about 1% of drawdown if it moves to its average. You can pick down here below what your average daily range calculation will be. So you can look back at the past 60 days, the past 10 days, whatever. Everything is customizable and I'm going to go through them all in this video. Obviously, the first setting we have is to open one trade per bar, which means per candlestick. Whatever chart you have this EA running is whatever moving average cross it's going to look for. First of all, we have our risk settings. So we can either choose a fixed lot size, a percent to risk over one average daily range of movement, or a dollar amount to risk over an average daily range of movement. As I said before, the average daily range calculations are found below. Next up, since we're averaging into these positions, we have to have our add-on trade settings. Our first setting is the lot multiplier, which will gradually increase our lot size per position added. I've covered this in other videos. And then next we have our minimum distance. So you can't be too close or too far, otherwise it's going to be hard to exit these positions if things get sticky. All we're doing is keeping our average price close. So we have a pull far down in one direction, we start averaging in. If we have too great of a space between our positions, we're not going to have our average price close enough. And if price comes up and down again, we didn't get out. We're stuck in this position. If your positions are too close to each other, each position added, you can get into major drawdown as well. So it is imperative that you backtest your own results and find a strategy that works. The third setting for our additionals I'm going to show in the backtester. So this is signal candle must close above or below our next entry line. What this setting is that we have our first position here and our additional entry is up here. You can see the white dotted line. So when it reaches this dotted line here, you'll see that it's not going to just enter another position because it's hit our spacer. So we're way above our spacer at the moment. However, we did not enter a position because we hit it. We're waiting for another moving average cross to enter that next position, which looks like it did just there. So we're not going to just enter because we hit our next spacer. We're going to wait for another moving average cross, which will get us a better entry. The next settings we're looking at are take profits. So we have take profits in percent and take profits in a dollar amount. Our single trade will be if we're in one position. So we enter one position and we write and we get profit. The next is multi-trade. So once we enter 2 or more positions, our TP can either change or be the same. Obviously, these are all customizable. Following trade is if you somehow get in a long and a short because maybe you're stuck in a squeeze. This will be your third take profit. Remember, in percents or dollar amount. Alright, stop loss settings. A lot of people are confused with how my stop loss works. It's not actually a stop loss, it's more drawdown control. So I'm not fully closing off positions in a loss. However, I'm averaging out of positions the same way that I average into positions. So obviously you can have false or true if you want to have it on or off. If you have it off, you're a bit mad, but our first setting here is what percentage it's going to close off positions. So you can say that if the position's in 1% of drawdown, close off 40% of that trade. Or if it's in 2% of drawdown, close off 50%. Or if you want to have a stop loss, you can have 1 and close off 100% of that trade. That is pretty much just a stop loss. You can have maximum trades allowed, close all trades in a max drawdown target. So if you set this to true and you say, fuck, if the account goes into 5% of drawdown, just close everything off. Take me out. Those are our drawdown control settings. Okay, here are the RSI settings. So obviously we can have a look at the RSI period, the type, what time frame it's actually going to look at. So this is our high time frame confluence. Obviously, the higher the time frame you look at, the better data you'll get. And we have our RSI high and low trigger. So all of this is customizable. RSI is our first entry criteria, and the next settings will be our next entry criteria. So as I said before, whatever chart you have this running on will be what moving average cross it's looking at. So if you have it on the M15 chart and you have the 20 exponential moving average at the close, then you'll get your first entry. So these are our entry settings. RSI, higher time frame, moving average cross, lower time frame. Next up, we have our ADR numbers to use for calculations. So the ADR will be used to calculate our risk over ADR plus our distance between trades as a percent of the ADR. So whatever you use here will be pretty much used to calculate your risk. Last but not least, we have the swap filter. So you can actually just turn this off if you don't want it. But if you do want it, I do recommend it. You can choose a dollar amount. So per one standard lot, depending on what pair you're trading, if it costs over $5 per lot to hold it overnight, the bot just won't take that position, because if you get stuck in a position, you can be paying swap fees daily. So you can set this to say $1 or $0. And what that's going to do is you will not enter positions on pairs that will charge you to hold them, and you'll only enter positions with positive swaps. The last settings are your magic number, which needs to be different per chart running. So any number, literally any number in the world is fine, just as long as it's different to the next. And the last few settings here at the bottom are literally just your data box. What color it's going to be and what the text size is. If you turn this to false, you will not see the data box. I hope you got a basic understanding of how the EA works after this video. If you have any questions, message me on Discord. I'll leave a link below, as well as check out some of my older videos. I've covered in depth how to backtest properly so you can find your own profitable strategy. My EA is free to use in the backtester on MetaTrader 4. I'll leave a link for that below as well. Anyways, cheerio.